Hello traders, and welcome to the FX Smart channel. In today's video, I'm going to introduce you to an advanced and innovative strategy that's designed to give you an edge in the Forex, crypto, and stock markets. This strategy is built on the latest market concepts and boasts a high win rate. Whether you're a seasoned trader or just getting started, this strategy is sure to impress. Stick around until the end of the video because you won't want to miss a single detail. Let's dive right in. If you're watching this video for the first time and haven't subscribed to our channel yet, make sure to hit the subscribe button and turn on the notification bell so you get notified whenever we release a new video. Thank you. Now, let's get started by adding the indicator to the chart. Go to the TradingView website, search for the IC Unicorn indicator from the Indicators tab, and add it to your chart. As you can see, I've chosen the 5-minute chart for gold. The indicator's performance dashboard is showing a 71% win rate, which is impressive and proves its effectiveness. However, keep in mind that the win rate of this indicator may vary across different symbols and timeframes, so you'll need to fine-tune it to match your specific trading setup for the best results. Don't worry, in this video, I'll guide you through the different sections of the indicator and explain how to optimize it. Now, let's start by understanding how this indicator works. The IC Unicorn entry model combines the concepts of breaker blocks and fair value gaps FVGs, providing a unique method to identify trade opportunities. By integrating these two elements, you can place trades with defined stop-loss and take profit targets based on potential support and resistance zones. This model is particularly reliable for trade entries as it leverages two powerful techniques. Now, let's work on improving the win rate of this indicator and enhancing its performance. If you go to the settings and click on the input section, you'll have access to the indicator's settings. As you've seen, the default settings are already quite good, but by changing the TPSL method to dynamic, the performance can significantly improve. However, keep in mind that this setting may not work as well across all symbols and timeframes, so it's essential to adjust it to fit your specific strategy, symbol, and timeframe. As you can see, the win rate of the indicator has increased to 83%. You can experiment with different methods to find the best results for your trading setup. In the style section, you can also customize the chart's appearance by disabling certain elements. I prefer a simple chart, but feel free to adjust it according to your personal preference. As you can observe in the live market, the signals from this indicator are outstanding. If you're not familiar with concepts like FVG candles, valid FVGs, and valid FVG breakouts, I recommend watching the Smart Money videos in the Smart Money playlist. I've covered these topics in detail, so make sure to check those videos out. If you found this video helpful so far, please support us by liking the video and subscribing to the channel. Your support motivates us to create more content for you. Now, let's move on to the rules. If you're looking for a reliable and reputable broker with a proven track record, Trade is your best choice. This broker has been active in the financial markets for many years. Let's take a look at the Trade online platform. This platform will astonish you. You have access to a wide range of indicators and all the analytical tools you need. One of the remarkable features of this platform is its amazing indicators. You can add any number of indicators to your charts without any limitations. If you want to check important news and reports, you can easily access them here without having to scour other websites for market news and report release times. You can conveniently set up multiple alerts on various symbols and not worry about missing opportunities. Access to your account is easy, allowing you to manage your positions effortlessly. You can use this platform on both mobile and Windows devices. It's an amazing platform with a plethora of features and incredible tools. Don't miss out on this opportunity. Join this broker today and enjoy trading. I've provided the registration link in the description. Rules for entering a buy position: wait for the price to break out of the bullish order block, highlighted in blue with a high momentum bullish candle. If the candle that breaks the order block is also an FVG candle, it adds more validity to the setup. The indicator marks such candles in green. Typically, the price will retrace to this area and pull back or form a base just above it. Once a base candle is formed and a buy signal is generated, open a buy position. Place the stop loss a few pips below the FVG candle. For the take profit, use the suggested target level provided by the indicator, marked with the green line. To maximize profits, consider using a trailing stop loss technique. In the following sections, I will show you other methods for entering a buy trade. Rules for entering a sell position: wait for the price to break out of the bearish order block, highlighted in yellow, with a high momentum bearish candle. If the candle that breaks the order block is also an FVG candle, it adds more validity to the setup. The indicator marks such candles in red. Typically, the price will retrace to this area and pull back or form a base just below it. Once a base candle is formed and a sell signal is generated, open a sell position. Place the stop loss a few pips above the bearish FVG candle. For the take profit, use the suggested target level provided by the indicator, marked with a green line. To maximize profits, consider using a trailing stop loss technique. In the following sections, I will show you other methods for entering a sell trade. In this section, I'll show you another technique for entering a buy position. As I've mentioned multiple times in previous videos, after breaking support and resistance levels or supply and demand zones, the price usually returns to retest those levels and pulls back. Here you can see a resistance level that has prevented the price from rising several times. But eventually, the buyers manage to break through this resistance level. In most cases, the price will return to this level again. If we were to enter a position here initially, the risk-to-reward ratio wouldn't be favorable, and the distance between the entry point and stop loss would be too large. So we wait for the price to return to this level and react. As you can see, the price pulls back to the blue order block, and with the confirmation of a bullish engulfing candle, we open a buy position here. I set the stop loss a few pips below, and for the take profit, I use the level suggested by the indicator. Let's see the result. Now, let me show you another technique for entering a sell position. As I've mentioned multiple times in previous videos, after breaking support and resistance levels or supply and demand zones, the price usually returns to retest those levels and pulls back. Here, you can see a support level that previously prevented the price from dropping further, but eventually, the sellers managed to break through this support level. At this point, a sell signal is generated. However, if we had entered the sell position right away, the risk-to-reward ratio wouldn't have been favorable, and the distance between the entry point and stop loss would have been too large. So we wait for the price to return to this level, which is now an order block or resistance zone, and react accordingly. As you can see, the price pulls back to the yellow order block, and with the confirmation of a bearish engulfing candle, we open a sell position here. I set the stop loss at the swing high and use the level suggested by the indicator for the take profit. Let's see the result. As you know, no indicator or strategy works perfectly 100% of the time in financial markets. Here I have prepared an example for you. As you can see, the price has broken out of the order block and triggered a buy signal, but the price reversed and didn't continue upward. We call this a fake breakout. Additionally, above the formed order block, there is another order block, and the distance between them is very small. However, if you recall, I mentioned that after a breakout, an FVG candle usually forms, and above the FVG candle, a base area should develop. As you can see, this base area hasn't formed in this instance. But here's another important sign, which I teach in my advanced course with my students, and I'm sharing it with you for free. Look at this area. When the price moved from the demand zone, it lacked sufficient strength and started moving in a zigzag pattern. However, if it had begun with 3 or 4 consecutive bullish candles, you could be more confident that the upward movement would continue. You can also observe the same pattern near the supply order block, where the price again starts moving in a zigzag pattern, indicating that the buyer's strength is weakening. When you see these signs, it's best to exercise caution and wait. You can use the second method I showed you, waiting for a retest before entering the trade. Unlock your trading potential with FX Smart Academy. Whether you're just starting or looking to refine your skills, our comprehensive courses cover everything from the basics to advanced strategies. With our expert guidance, you'll gain the knowledge and confidence to navigate the markets like a pro. Join our community today and gain access to exclusive trading signals with high accuracy designed to maximize your profits. Don't miss out on this chance to elevate your trading game. Sign up now and take the first step towards financial freedom. Click the link in the description to get started. Your success story begins here. If you enjoyed this video and found it helpful, please like the video, subscribe to the channel, and share it with your friends so they can benefit from it too. Until the next video, stay successful.